Aloha everyone, Joshua Hayes at bigwavetrading.com. It's been a while, about a month, and we have a lot to go over, so let's jump into it. First off, this market in the short term, actually since February, has been very, very weird and difficult to manage. The SPY has done very well. The Dow Jones Industrial Average has done better, but the QQQ and the IWM has been nothing short of weird. Nothing terrible, nothing great. But I tell you what, I have never seen the kind of angst and losses that I've seen the past 3 months on social media that I've seen following these past 3 months after such a bullish 2020. It seems like the vast majority of people that made a lot of money in 2020 just spent the last 3 months losing it all. Now, here's the thing. How have we done at Big Wave Trading during that time? I'll tell you this much. It hasn't been easy. We've had some winners. We've had some losers. We've had a lot of chop. We've had a lot of shakeouts. We've had to cut our losses quite a few, more times than we have been lately. But the bottom line is, it hasn't been that bad. The one thing I can say, big wave trading has never caught on in the trading community. I've never garnered the respect that I believe I probably should have gotten by now, but it could be because I live on Maui. But I'll tell you this much. In the entire existence of bigwavetrading.com, the one email we have never received is, "Oh my God, thanks to you, I've blown up my account." I can't tell you how many times I've read, "I've blown up my account. My account blew up. I went on margin. It's all gone," on social media the past few months. Guys, I understand seasonality. I understand market trends. I understand market internals. And I know a healthy market from an unhealthy market. And what you have right now is not an unhealthy market, but it's not a healthy one either. We're in one of the weirdest bifurcated markets that I've seen in a long time. The reinflation, commodity, value, dividend, reopening trade has taken the lead from the growth stocks, and that's best shown using the IWF-IWD ratio. See here on stockcharts.com, you can see how strong it's been since the end of 2019 until about August 2020. Even during the pandemic sell-off, growth was leading value. But now you can clearly see growth is not leading value. Value is moving down. And this was a key line in the sand right here as previous resistance became support. And that cracked. What's funny, it cracked the day after I rebalanced our quarterly model portfolios. And I had a chance to add some dividend reopening trade stocks. And I stuck with the growth theme because I believed the growth theme was going to continue, and that bit me in the ass in the most recent quarterly portfolio. We'll go over that here in a bit. This hint that all of that was happening was back in February. Actually, I want to show you my other charts because it's a bit easier for my eyes, and then we'll get back to this. When we made this last leg up in February, I told all members, and I'm sure it's in all these public videos that I've made, I complained that this was a V-shaped rally on no volume, and I had the dreaded red bop. When I get red bop, that's never good. And sure enough, prices didn't move any higher, pulled back, but then we did it again. We had another really weird V-ramp to new highs, and here's where the problem started to show up for me. And I mentioned these in tons of video. I make a video lesson every day for members, every single day. I barely miss one, and it's due to time constraints. But I probably even mentioned this in public video lessons. On this move higher here, I started to see negative divergences in my internals that I follow, like new highs, breadth, moving averages over moving averages. But more importantly, my top quality perfect speculator scan that I built based off the book, The Perfect Speculator by Brad Kodeshwar. I had more stocks than ever hitting my perfect speculator scans here. When this market made a new high here, the numbers in my scans were not eclipsing what they were here. No shock to me, we pulled back. And as we rallied higher, when we got back to those February highs in April, the numbers were even lower. They are still subdued, and we are moving sideways basically in the market and the QQQ. So it's no shock to me that we're not making any progress here. But more importantly, guys, seasonality matters. The most bullish 6 months period for stocks is November to April. The most bearish 6 months for stocks are May through October, the end of October. On top of that, bullish periods run within about, I'd say, a 45-day period. And starting on May 15th, we entered a bearish 45-day period that lasts until June 30th. From June 30th, we will be bullish till about July, from June 30th, oh my gosh. Period of April 1st ended May 15th. From May 16th to June 30th, we are in a historical bearish period of time. We will then turn bullish short term from July 1st to August 15th. But from August 15th to the end of September, it gets really ugly. And I'll remind everybody, since 1950, that's when I derive all of my statistics, August and September are the worst 2 months for stock market returns going back the past 71 years. And if you want to hear something really funny, pre-earnings going back to 1950, the pre-earnings total for the S&P 500, the return is 24.5%. The rest of the balance of the year, it's only 4%. And all day since 1950, it's a total of a 9% return. But from June 28th to July 17th, that will be a bullish period. But the bullish period of earnings pre-run, April 1st to April 18th, is behind us. The bottom line is we are in a poor seasonality environment. We have a poor market environment. The QQQ, as you can see, is having trouble at its 50-day moving average. So we got to continue to monitor that area. The IWM can't get back above its 50-day moving average, which is starting to roll over. The SPY looks much better, but it's still range-bound. The DIA looks much better, but it's still range-bound. And remember that red bop I talk about? But it was here and you moved higher. Yeah, but it hasn't been smooth. It could definitely move higher. Like I said, it wouldn't be shocking if we see that run from July to August 15th, and maybe we do make a new high there. But after August 15th to the end of September, I recommend everyone being very, 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 very safe. Like I said, there's a lot to go over, so I'm going to try to unpack it all. We'll do the weekly here on the SPY, and we'll just focus on the SPY for right now. So right here, what I have drawn here, you see all these dashed lines? These are Fibonacci retracement levels. I've measured the high before the pandemic sell-off to the low of the pandemic sell-off. And what we have then following that are Fibonacci extensions. You have your 100% level right here, which coincided with the SPY chopping around before getting back above it. We hit the 127 retracement here, acted initially as resistance, a couple of hits, then support, and now we've rallied into the 162 retracement, which is normally the end. Now there are more up here, but when you hit the 162, that's about as much as you can expect from a measured move higher before a significant pullback. And on top of that, when that also happens to coincide with the 3 ATR standard deviation of the 21 exponential moving average on the Keltner channels. That's what these white lines are. You can see on the weekly it gets down below this 3 ATR and then it rallies higher, gets up here to the 3 ATR, pulls back, doesn't touch it, and now we're touching it. We are now touching it while at that 162 extension as we are in a poor seasonality environment. The odds of this market moving higher and sustaining itself is very low here. The odds of a pullback or further chop and consolidation is much higher. If you think 2021 is like 2020, you need to get that out of your head. Now listen, I love intraday trading, but I have so many commitments right now I can't day trade. And on Friday, did you guys see ANVS? That sure was incredible. Look, I even have the pre-market high drawn on here. I want to get rid of the ATRs. But this consolidation period here and this move here, intraday, 40% gain all over it, hitting all of my scanners, my halt, my float volume scanners, and just hitting every scanner. Listen, there's some great money that can still be made out there on the shortest time frames. There's even good money in some swings. But it's going to be very, very tough when your weekly is at the 162 extension of the price move and a 3 ATR. Not only that, look at the monthly. The monthly is at the one, obviously it's going to be at the 162 because it's a measured moving price, but it's also at the top of the monthly 3 ATR. Now, 2017 was the last really great uptrend. You can see that ever since then, we get up to the 3 ATR, sell off. Get up to the 3 ATR, sell off. Will it happen this time around? I don't know. I just know that we're here at the 162 fib retracement and the 3 ATR, and that's always a red flag for me. So everybody should keep that in mind as we move forward. Now, how do you know when it's a good environment to increase size? I'll review that with everyone one more time. The best stock market returns in my entire career are during years whenever the VIX is below 20. Now, I started early on in 1999, or 1998, excuse me. Let's see, I thought I could put all that in there. 6, there it is. And whenever I started in 1998, it was below 20, but the VIX resided above 20 during this time. But yet, I made a killing on my long position swing trades during that year from 98 to 99. Even in 2000, 2002, there were some winners in there, but my best returns ever came during 2003 into 2005. No surprise, the VIX is below 20 during that time. Also, had very great returns during 2013 to 2015. No surprise, the VIX resides below 20 during that entire period. And the last time that my end-of-day swing trades absolutely killed it, and the last time that my portfolio on the end-of-day side has had returns that destroyed the overall market was in 2017 when the VIX was below 20. Notice that during 2018 to 2020, the VIX is below 20, but yet I didn't get amazing returns because there's one piece of this variable that I'm not including in this equation currently. And then you'll notice during the entire uptrend of 2020 in the market, what happened? The VIX stayed above 20 the entire time until just recently. It just recently decided to go back below 20, and by then, the market's up here in the stratosphere. Now, what's the missing piece of this equation? For those of you that are new to this video lesson, I'll show you. It's a beautiful middle indicator. Now, I'm going to use the SPY, and there's really only two indexes I want to line up, IWM and SPY. So SPY, boom. This has the most data, so we're going to go back here to show you this. So remember I told you I made a lot of money from 1998 to 2000? Did I get lucky with the VIX over 20 and all my swing trades killing it? And I have all those past big winners on my website, and you can see the returns that I used to get during that time period are exponentially larger than the returns we get nowadays. It's just the nature of the market. But look at this middle window. What was green the entire period? Time, segment, volume on the monthly time frame. Remember the next year that I told you when I had great returns was in 2003 to 2005? What was green during that entire time? The monthly time, segment, volume. How about in 2013 I told you about? Not quite as pronounced, but it was green the entire time. Then I said 2017, right, to 2018. What was green the entire time? Well, the monthly TSV didn't turn green until July of 2020 after the V-shaped rally started. But remember, during this period, while I had some winners, I wasn't getting a whole lot of great setups because the VIX was below 20. And because we were so extended by the time the VIX went below 20, the monthly TSV now looks great. And it looks great on the IWM too. If you look at the IWM, we've been green since September 2020, which, by the way, we were in a bearish condition since June of 2018, one of the longest periods ever of that much red. As you can see, look at it. It only goes back to 2003. But do you notice in 2003, 2004, the monthly TSV is green? Notice 2009, off the lows, monthly TSV. 2013, monthly TSV. 2017 monthly TSV. Well, we have it now. We had some good stock returns, but recently it's been messy, even when the VIX got below 20. How is that possible? 162 retracement, extension from the lows, 3 ATR. We need to pull back. As long as this monthly TSV remains green, I'm a huge buyer on any pullback, but I need to see something happen. So while the monthly TSV is green, and while the VIX just recently got below 20, what did the weekly time segment volume look like on the IWM? Not pretty. No surprise. Remember that negative divergence I told you about February to March? Well, what happened in March? Time segment volume went bearish on the IWM. Now on the SPY on the weekly, it just recently went red because the SPY was doing better than the rest of the market. But the IWM, small caps, that's my bag, baby. That's my sweet spot. That's where I go to hit my big winners on the end of day side. And intraday, it's the only kind of stocks I focus on. Stocks with low floats, low market cap, low institutional ownership, and or needs to have a high short float, doing massive RVOL with a news catalyst in the morning are my preferred trades. And I know I have a VWAP, TTM squeeze reclaim methodology that I use. I also use a 21 EMA VWAP cross methodology, and I know how to join the trend. Right now, though, I cannot day trade. The market opens at 3:30 a.m. Maui time, and right now, due to current commitments, I'm just overwhelmed right now. I can't day trade. I can only swing trade. So until this weekly TSV goes green again in the IWM and the SPY, it's not the ideal time for me to increase size on new long positions. The daily, you can see the SPY, even when it was moving up here, what was the time segment volume doing? Not pretty. QQQ, daily, not pretty. Why fight this, guys? DIA, not pretty. Now, the IWM daily has curled here, but look at the last two times it curled. Look at the open candles. Look at the open candles. And even then, the rally didn't turn to much. Now we're crossing here, but we have that reversal candle right at 21 EMA. So things aren't lined up, guys. Things are not lined up. I use all of this analysis to then determine, whenever I do get a long signal that I want to take, how much capital do I want to place into this? How much percent of that capital do I want to have at risk? How many positions do I want to have on? And how much room do I want to give these stocks? Whenever the monthly TSV, weekly, and daily TSV is green, and I'm getting great signals, and the VIX is below 20, baby, I'm pushing it. I'm pushing it hard. I'm pushing it big. And whenever I get great signals, I'm all in. Whenever I get near perfect or near great signals, I'm heavy. I'm heavy. But when things don't line up, I reduce size. When things don't line up and I don't get great signals, I'm not pushing anything. I'm not pushing all in on anything. When things don't line up and I get near perfect, close to perfect signals, I increase size, but don't go nuts. I wait for everything to be lined up on an end-of-day basis. And if you're not patient enough to do that, you can keep trading. But you got to remember, this is a market environment where you trade small or you do not trade at all. There is no other, you can go all in if you want, but then you're going to turn out like all these other people I'm reading on social media. Guys, I got blowups everywhere. Day traders that I follow, people that follow these day traders, blowing up. Swing traders, blowing up. We don't blow up here. And in fact, I want to get back to this quarterly portfolio nonsense that I was just talking about. Now, it's going to be choppy. We know that you trade small or not at all on the swing side, intraday side, unless everything lines up, catalyst in the morning, low float, volume rotation, halt, blah, 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 blah. You even want to be small there, but if you know what you're doing intraday, you can increase size. Let's then go to a time frame that doesn't require any trading that I do, my quarterly portfolios. Every 90 days, I now have 4 portfolios. I used to have 3. Starting last quarter, there were 10 stocks. I didn't add to any of the portfolios. Those 10 stocks happened to be up 13% compared to the S&P 500's 5% return. It was the only portfolio to do better than the rest of the market. Let's review the stocks. 16th, I had a decision. Stick with the growth or move into those reinflation trades. I've always done growth before. The IWF and IWD ratio, remember that we looked at earlier? It was at a critical 1.69 level. Remember that resistance is now support level? So I went ahead and went with the growth names. The very next day, that ratio broke down. What are you going to do? These are the names I passed on from February 19th, which is, where's that at? From right here to May 19th, and now we're in our new portfolio names. So from here to here, these are the names I passed on. COWN, up 10%. DE, up 8%. EWBC, up 10%. LRCX, up less than 1%. MGA, up 15%. MOS, up 21%. NWSA, up 15%. RRR, up 37%. STLD, up 52%. And do you want to know what? I even put Viacom in there because this is what it looked like there. And look at what it did initially from February 19th to its highs. 60% gain. But it ended the quarter with a 36% loss. Despite that 36% loss with that one stock, those 10 stocks, 10% of your account capital in each one holding for 90 days was up 13% compared to the S&P 500's 5% gain. Now, I went with my growth models. My models want to beat ARK. ARK is my benchmark. S&P 500 is my benchmark, but ARK is my real benchmark. The S&P 500 was up 5% during that time. My growth A portfolio was down 13%. That's the worst negative divergence ever compared to the overall market ever. However, my 13% loss in comparison to my benchmark, ARK, 32% loss. So, I lost 13% in my quarterly portfolio while ARK lost 32%, which is my real benchmark. Don't like that I lagged the S&P 500, but I love that I beat ARK by that much. That being said, last quarter was a disaster, quote, quote, disaster, compared to the previous quarter, which was the best quarter ever. Actually, the last 3 quarters have been great. And if you're like, oh, well, your quarterly portfolios aren't consistent, let me remind everybody. I'm looking at my spreadsheet right now, my other monitor. My Growth A portfolio since November 2018, November 19th, these are all on the 19th, is up 208% versus the S&P's 54% gain. My Growth B portfolio was up 89% compared to the S&P 500's 45% gain. That dividend portfolio was up 13% compared to the 5% gain, and it's now a new portfolio. New names have been given to everybody on the 19th. That's a quarterly or annual platinum member. And the Strong Relative Strength portfolio since May 2020 is up 68% to the 42% return of the S&P 500. So if day trading is too for you, because that intraday movement, if you don't, I have DAS Pro and I use trade ideas, so it's not as nerve-wracking for me, even though day trading isn't my preferred methodology, but it's the one that produces the biggest gains in the shortest amount of times, and I'm pretty consistent with it. And I do have my methodologies that I've self-made that work. And at the end of day, swing trading is too hit and miss. You're going to normally, let's say, listen, this is very normal for me. 4 trades, 3 losers, 1 winner. All 3 losers, about 5%, the 1 winner, 50, 100, 20% gains. Very, very, very normal for me. If not, I have these quarterly portfolios, and these quarterly portfolios prove that things can work when the market is right. But when the market's not right, it's going to be very difficult. But that being said, heck, if you don't want to trade, the quarterly portfolios are a great way to make some passive income over a long-term period. This past quarter, disaster. But one quarter, whenever you have a 20 plus, 25 plus year time horizon, and you can see the inception returns, that's nothing. So with that being said, I want to go ahead and show everybody that while it has been a rough quarter, while I see a lot of people losing a lot of money, and I'm telling you right now, there isn't one member at Big Wave Trading that's losing a lot of money. May people get upset that there isn't a lot of long signals right now? May people get upset that more failing than winning? Yeah, but if you cut your losses and preserve capital, you'll have it available for whenever you do get on the right side. And I want to show you some stocks that I'm personally still long and or still tracking on an end-of-day basis for members of Big Wave Trading that have not produced end-of-day sell signals yet whenever I then remove them from my tracking list. Let's get to those. So EDRY, this is one that I no longer have a position in. Why? I told you guys, if everything doesn't line up, I don't go all in on each and every trade. I like to size into each trade based on how much I'm going to lose initially. Professionals focus on how much they're going to lose. Amateurs focus on how much they're going to make. So every trade decision I have, I want to make sure that whatever I'm going to lose is my max loss I'm willing to take on the initial entry if I'm wrong. I give out every trade idea to everyone with the exact entry and sell parameters before I take them on my end. I don't ever take a trade before I give it out to everyone. I give you the good to cancel buy stop and then give you the good to cancel sell stops initially. And then if a trade issues a 50% or 100% end of day sell order, I post that. But guys, every time I partial out, or because I trail higher with stops and I split them up and I take profits along the way up, if I tried to post that for everyone, I would lose my mind. Now, Interactive Brokers tracks it all for me, but we want to keep this simple for right now. EDRY was a long signal here, entered it this day. Now listen, I ran out of shares because right now, most of my trades, my max loss is 1%. I take the good to cancel buy stop, subtract it from the good to cancel buy stop, get that total, and then whatever 1% of my current account capital is, I divide that number into that number, and that's my share size. And if a stock is choppy and moves higher, it's eventually going to shake me out and I'm going to run out of shares. And so for this one, I've run out of shares. But I want to show you, everybody, since this long signal to here, it's a 220% gain, and it hasn't issued a 100% end-of-day sell signal yet. That's just one. CNR. Look at this one. Initially was a long signal, but guess what? It shook my ass out. But guess what? Never issued a full sell signal because it never closed below the September low. Closing low, or printed low. That's a 109% gain. No close below here means the stock is still long on an end-of-day basis. But CNR got me fast. Got me out fast. Still tracking on an end-of-day basis because it hasn't failed. VOC is one that I still have a position in, but it's small. But still, that's a 30% gain. Notice all these stocks, all of them, where are they all from? Value areas, dividend areas, reinflation areas. No surprise there. AXR couldn't get much size in this one, but heck, 72% gain. AVID, one of the few tech stocks that are in this one, since it's long signal, have a very small size. Once again, thanks to how choppy it is. There's a 60% gain. NTP ran out of shares, still tracking on an end-of-day basis. This was the signal date, filled this day. 393% gain. Not bad, right? We'll go that one last. CRCT entered here. See that shake out there? Guess who got all of me? Me. But on a closing basis, it didn't produce a final sell signal. 47% gain. It's choppy, man. I'm not used to this stuff. Not used to how choppy this market is. SPLP, this was the long signal here. This is when I got filled. Still have a small position left. 88% gain. DEN, this is one that I still have a decent size in. DEN, the new long signal was here. Gapped up on me. No fill. Pulled back. No fill. Finally, it pulled back, got filled. From the signal date, DEN, 42% gain. And then a recent short-term one, EVC. Long signal, right here, got filled, and it's working out. Not a huge winner, but in this market, an 11% gain, I'll take it. Now, the thing I want to show you with EVC, I'm going to wrap the video lesson up here with the signals that I look for. EVC, look at the price off the support, 50-day simple moving average. Look at the volume, truncation, barely. It's barely bigger than this volume bar here. And look at the BOP surge to max green BOP. Okay? Look at what this chart's doing. Okay? I show this to all my members every day, 365 days a year. I tell people what I'm looking for. I tell people that I like the chart. I tell people when I go all in on a position. I tell people when I increase size on a position, when I have conviction. But this is what a chart will look like. Do you guys want to see some other examples? You got it. First, let's start with the one that I always reference, because this is the chart that I'm looking for to take all of my account on full mark. I'm serious, guys. I do it. I will do it next time. See this? Look at the volume truncation. Look, notice how it doesn't just barely truncate all the previous volume bars. It destroys them. Look at the max green BOP. Look at all the green BOP in this chart. Look at all the tall green volume bars. Look at all the pocket pivot point signals. Guys, I haven't seen a chart like this since WTRG in 2019. This This is the last chart I've seen like this. If you look at my past big winners, you'll see a shitload of charts that look like this. Sorry for cursing. They just don't show up anymore. But anyway, if you want to know what a chart like this can do, this is what it can do, and this is what it's supposed to do. Notice how there is no initial shakeout. Notice how the trend is higher. Notice how the 50-day never breaches. From that signal to that high, my God, I wish it wouldn't have been a utility stock because it only produced a 22% gain. But whenever you get that signal, that's what can happen. So that's WTRG. That's what a perfect signal will look like. We're almost done with this video lesson, guys. I just want to show you guys all the other ones. ESXB. So this one, full sell signal was just last month in April. But I want to show you guys what it looked like. It wasn't perfect, but the one thing that remains in common, look at all the previous green bop, still has max green bop. Look at the volume truncation. Look at the volume truncation. I really didn't think ESXB would work because there is a few things in this chart. There's a lot of red in this chart. There is no pocket pivot point signal on the day. But that being said, look at it. Pretty damn perfect. From that signal till the end of day sell signal, 68% gain in a slow moving financial stock. EVC we already went over. WTRG we already went over. Let's show you TWI. It's still tracking it on an end of day basis. I ran out of shares. Theirs was the signal date. Here's where it is now, 590% gain. Do you want to see what it looked like whenever I went long? Bam, 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 bam. What is it missing? It's missing that pocket pivot point signal. What is that pocket pivot point signal? It's a move off the 10-day simple moving average. EVC had it. See how that blue line jumps on my screen? So EVC had it. But TWI, that was a beauty. So TWI, let's look at FRBK. FRBK, this one sucked because I had size in it. So first off, bam, volume truncation, max green bop, pocket pivot point signal. But the price action, no good. Too big of a reversal wick. But then another volume truncation with max green bop and a pocket pivot point signal. Ho, ho, ho. I got a little heavy here. And it started to work out and then unfortunately pulled back. Now, why didn't I get stopped out? My final stop was 273. What was the low day of this day? 273. Came 1 cent away from being completely stopped out. What happened next is what should have happened immediately following the signal, but it ran into an overbought market. No surprise there. But since that signal here to its recent high, 46% gain. That's what I'm looking for. You want to see another one? Sure. NBN. NBN. Volume truncation, max green bop, pocket pivot point signal. We're at a support area. NBN. NBN. Look at that. What did it do? Still tracking it on an end-of-day basis. Ran out of shares once again. Didn't load the boat. 92% gain. Will I start loading the boat more on these kind of signals? Not load, but I'm definitely increasing size after seeing so many of these work, even in non-ideal market conditions. SPT, a little non-ideal, but still. Volume truncation, max green bop, pocket pivot point signal. What was the problem with SPT? It's not coming right off the 50 or right off support. It's a little extended. That being said, it worked. Where that was the high. And from that moment to this high here, 133% gain. We'll just do 2 more because they're not quite there. KNDY. Nope. KDNY. KDNY wasn't perfect, and it ran into a bad market, but once again, volume truncation, max green bop, pocket pivot point signal, worked immediately, got some nice good gains, but on this pullback here, shook me out of most of it. I barely have any left because my final stop was here. I've now moved my final stop to here. But KDNY, even though it wasn't perfect from that signal date to the high, 23% gain right there. And then I just want to show you one that came close recently. Oh. STOK. There we go. But my God, if it would have been, STOK, long downtrend, max green bop during the downtrend, no huge red volume bars, huge green bars as it sells off. Went long after this reversal. Got filled this day. That's why there's a white triangle there. But what's missing on this reversal, though? No max green bop, no volume truncation, or big surge in volume and bop to max green. If I would have even had a pocket pivot point, would have added to it. But that being said, I told everybody, hey, man, this is the kind of chart that if it would have had that volume truncation and max green bop, I would load the boat in. It didn't, so I didn't. And then, bam, big gain, big gain, big gain in this market, I should say, not big gain. Okay, guys, this video has gone on too long. All right, so if you guys learned something from this video lesson, if you enjoyed it, I ask a huge favor, everyone. Please like the video, hit the bell, subscribe. Please leave me a comment. Just say hello. Do anything to help me. I want to make more of these video lessons, but I can't seem to crack more than 200 views, and it's kind of depressing, I got to be honest with you, everyone, considering the information and value I give. And then if you do that, if you like, subscribe, and leave a comment, and if you really liked what you see, I'm going to remind everybody, I offer a premium service that is as inexpensive as it can get. I offer a no-nonsense stock twits service for only $10 a month, where I just give you the best of the best long signals, and I also give you the best of the best sell signals along with those long signals. Then if you want to then go up a level to the gold membership, which is on the website, it's only $300 fucking a year. I mean, God damn it. Can I make it any less expensive for all this work that I do? I feel like it feels like I'm ripping myself off. But I'm a man of the people. I'm not a man of the rich. I'm not a man of Wall Street. I look out for the blue collar workers. I don't care about the white collar workers. I mean, I do, but I really care about poor people that want to have a great future life. I definitely understand how hard the world is. I'm not one of those people that do not empathize. Well, just work hard and you'll make it. Wrong, man. So many people have nepotism and have privileges that others don't have. That's why the gold level is only $300 a month. You get nightly video lessons, you get nightly commentary, and you get all of the quality long positions and sell signals, not just the selected ones for stock twits. Then if you really want to join the family, if you want to be a part of the day trading chat room that I'm always in, I can't day trade right now, but those ANVS setups, the COCP setups from last week, where was COCP right here, I'm all over these intraday. My scanners, I don't miss any of them. I know what to look for. When I can get back to day trading full time, I'll be there. But even not during the market hours, I'm always there. And all those speculative long positions, the biggest gainers, the ones that are too thin to put into the quality long position, the ones that are too low price to list as quality, I give them all out to platinum family members. That's only $600 a year. Guys, every other service out there that I look at is $1,000, $1,500, $2,000, $2,500 to even $3,000 a year. And if you think that they put in more work than I do, you are insane. It's only $600 a year. And along with that, you get those quarterly portfolios. Remember those returns? I'll end the video lessons off with them again. For $600 a year, you get access to my Growth A, Growth B, Strong Relative Strength, and Dividend portfolio, which since inception, Growth A, 208%, S&P 500, 54%, Growth B, 89%, S&P 500, 45%, Strong Relative Strength, 68% to the S&P 500's 42% gain. And the recently incepted last month or last quarter portfolio up 13% compared to the S&P 500's 5% gain. That's what you get for a small fee. Long video lesson, but I probably won't be able to make another one for another month. Stay safe out there, guys. Respect seasonality. Respect the market. It's going to probably stay choppy and trendless for a while. And even if we do break out to new highs, if there's no volume, if there remains negative divergences in my scans and the internals, we are going to sell off again. And we do not turn bullish technically again till those bullish 6-month periods from November 1st to the end of April 30th. Keep that in mind. I love you guys. Thank you for watching. I know it was long, but hopefully it was worth it.